Charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options in place in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options in place in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh. Step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Well, hello everyone. Welcome to the opening playbook for Friday, February 6th. Happy Friday. Hope everyone's having a good morning. I see a couple questions in there about the 60-minute update that Graham and Jason did yesterday. It was fantastic. I agree with that. And it is for members only, though. So if you're a member, you can find it in the members area. However, I just checked and I don't think it's quite posted yet. It should be posted today, though. So check back later today and you'll be able to find it. And if you are interested in 60-minute income and don't have it, we can get you a replay of that. Let me know in a replay of the introduction to the program, and then you can once you join the program, you'll be able to see the meeting they had yesterday. So let me know if you're interested in that. Good morning, fellas.
Jason does just an awesome job. What a catch he was to find and bring onto the team. I'll actually show you guys. I don't know if I'm allowed to share my company chat here, but here was
Absolutely not.
Zoom in the way. Here was Jason at 11:30 last night, sending me updates on 60 minutes. So for you 60-minute guys and gals, we were testing out that hold all day strategy versus taking the profit early. So what we're trying to do is filter out, hey, maybe there's some days where the profit target makes a lot of sense. Like we'll see some choppiness or some bouncing back and forth. Versus some days where we're just getting an extreme move and we want to hold for that full 100% profit, which is like a 2-for-1. So here's Jason working late at night last night, applying the different rules. And this is insane. Nate, I'll show you this. This has not been optimized at all. We added in the VIX rule going back till, he was up till midnight and then back at it again at 6 a.m. He applied some of those VIX rules and here's what he's at so far. We haven't even optimized this at all. That's since 2023. Which if you guys were in the class yesterday, you know the peak profit we had so far in the optimization was about 80 grand. So what we're going to try and do now is, and that was like an 80% win rate, 80 grand. This one's a 60% win rate, 180 grand. So we're going to try and see if we can get the best of both worlds here with the target, no target, and optimize them together. So
yeah, that's awesome. Change it based on the conditions a little bit.
Yep.
That's amazing.
Jason's a beast. I have a couple new ideas for overnight options, and I need Jason to start helping me too. But I know you've got 19 more things on your list, so we'll see. Wow, is that the lotto board you have up right now?
I guess I'm sharing my full screen here. Yeah,
That is ridiculous.
this is the lotto board, and I am blown away. Four losers right now.
The cumulative return on
I
that, if
got
you add it up, it has to be like 3,000%.
it's insane. I got JPM is also one, but I also have one down here, so I don't want to put two. They're two different entries. So I got another one here too. Thing's insane. I'm only doing like one contract, two contracts. Like you can see my net liquidity, there's nothing over 200 bucks in here. I'm up $1,300 just from one contract.
Yeah,
That's
that's pretty
insane.
insane.
Blown away by this. Hopefully you guys got TXT yesterday. Now this is I don't know if it's funny, but Josiah, many of you guys have seen Josiah on some of our webinars and such. He works behind the scenes on our team. We always make fun of him because he's the kind of guy that he'll miss 10 trades because he's like, I'm not going to trade it. And then he'll see us hit 10 winners and be like, all right, I'm going to trade the next one. And he happened to, the only lotto board pick he's taken is TMO. So next time Josiah takes a pick, we'll have to have him send out a telegram.
Right.
And by the way, Josiah's taking this one, so you probably want to pass.
He's the mad money. He's the mad money of the pub.
That's right.
We've been messing around with Josiah with this, but his knack is incredible. Even back, like it goes all the way back to when we were messing around. Some of us who are, like to have fun and do stuff. We're buying some of the crypto squeezes and stuff like that. And Josiah bought Trump coin, which is down 99.8% or something. So
we all the day that Trump coin launched, and I was like, this is probably just going to blow up over the next 24 hours in a good way. And then who knows what will happen. So me and my buddy scalped it. I think that you were in on that too. Like doubled in a couple of hours. Just I threw $1,000 in, and within I'm not kidding, within 45 seconds, it was the peak.
Yeah, it's pretty wild. Well, I know we have a ton to cover today. We're going to do the Friday focus. First time opening a new segment. Going to dive into Tesla here in a minute. Well, maybe in a few minutes. We've got a couple things to cover before that. Graham's going to do his gold trade. I want to get that on the board. I think it's a good price to do it at.
Mm-hmm.
I asked this in the chat, and I really wanted to take this part seriously. I'm going to take a minute to address some people who took it on the chin a little bit the last couple of weeks. I know I did. I had two option X trades that were pennies away from the target that flipped around. Hopefully ABGO is still actually going to end up being a winner, but Amazon obviously not unless something absolutely crazy happens. Override options, I was celebrating 8 in a row, then lost 2 out of 3. So like I know exactly how it feels to take it on the chin, but I think we really have to address a little bit of the psychological side, especially with something systematic. And so please stick around and just give me, I know it's not, we want to talk about fast trades, good ideas, that kind of stuff. I will get into that, but just give me 5 minutes to talk about that. Because if we don't get that right, nothing else really matters. So I'm going to pause it and talk about that. And then we'll jump into Tesla and the opportunity there. Oh, by the way, Graham, I'm doing these calendars on Mag 7s that I'm really interested in because of the data I ran. So far, I've done NVIDIA twice. It dropped 3% the first time I did it and moved 5% today on a stock that my data says historically 82% of the time will come within 0.1 ATRs of the previous close. So so far, my Mag 7 money start is not going great.
It probably doesn't help that we've seen that rampant volatility over just the last 7 days or so. But we'll see how it shakes out over the longer haul when things get a little bit more steady. We'll do the gold trade now, the gold income trade. Before we do, let me show you just a couple of things I saw on Twitter, now known as X, last night that I did want to point out because I tend to give you guys this information on Tuesdays and by then it's way too late. Here's an interesting chart that I'll share with you guys on Tuesday. Hope you can see this. 16% of S&P 500 stocks are at 52-week highs. 5% are at 52-week lows. Only happened 3 other times, so not a huge sample size. But each one was followed by a further correction in the market over the next 2 months. So over the next couple months, maybe some rockiness. Well, let's look at Bitcoin. Has everyone's seen Bitcoin by now? How it touched down to $60,000 yesterday? Well, when it did that, the RSI went to extremely oversold on the weekly. It's only happened 4 times before. In every instance, Bitcoin was higher within 4 days with an average gain of 16%. I wish I saw this last night. I wish we could have seen this morning and been able to profit because Bitcoin's already up like 12% since the lows.
Yeah, that's what we got to talk about on the roundtable today because it is pretty wild. The thought crossed my mind of buying it for just a crazy risk reward yesterday, but I couldn't pull the trigger. It
Yeah.
was just so insane. I couldn't pull the trigger.
And then here's the one that gets me most excited right now. And we talked about the 100-day moving average being support. So far, it looks like a tremendous support level, playing out perfectly. Here's a little data that I found last night as well. S&P 500 fell yesterday, but more than 70% of the stocks went up. I know a lot of the
Yeah.
tech names, chips, energy stocks went down, but 70%, 7 out of every 10 stocks went up, which is very, very healthy, actually. It shows that it's a very strong market under the hood. Now, this bullish breadth divergence has only happened 11 times before. 10 out of those instances, S&P rallied over the next 3 to 4 days. So we're seeing a pop today. Historically, that lasts for about 4 days. So this is just something to keep in mind here as we are finding support at the 100-day moving average. We saw put to call ratio overextended where we're saying, hey, it's time to start buying some. And then also the breadth showing for a short-term pop back. So hopefully we can make some good money during this little time frame here.
Yeah, and just to reiterate that, even today on a big day up, that's usually when you get the flip, like technology is leading the way, but the rest of the market not. RSP is actually at more than SPY right now today. So we're actually still getting a very healthy market participation, even on a big up day, which is usually not the case.
Yeah. All right. Well, let me go ahead and do the gold income trade. If you guys have been following along, we should be collecting our 12th or 13th winner this week. Pretty awesome. We finally got a pullback near the 50-day moving average. Didn't quite touch it. It was scary, right? It was a little bit scary. We had our strikes in here from last week because it was so high up. But now we're back within range. So we should be able to get some good strikes here at the 50-day moving average. We'll go ahead and take a look. You can obviously see here, I have positions many, many weeks out. So again, we're going to go about a month out. And if you're new, guys, we're going to use a bull put credit spread. So we're going to collect premium on gold with the idea that it could go higher, it could chop, it could even fall a little from here. But we're just not bearish on gold right now. We don't think it's going to tank another 20%, especially from here after the recent plunge. So we're going to give it about a month to pay us some premiums here. And we'll see what they pay out at those strikes. Hopefully we get a little increase in IV too. So here's a 90-cent one on a 5 wide, 92. It's a little, luckily you won't have to take as many contracts, but let me go ahead and tell you what this one's worth. This one's worth 22%. And it's right there. And we can't get exactly that 416 because there's only 5 wide strikes at this expiration. But this one looks pretty good to me. It's right around that 20% mark that we want to get each and every week that we're doing this. So what I'm going to do here is I'm going to buy the 13th of March 415 put, and at the same time sell the same expiration 420 put. Set your limit order at 90 cents or higher. The higher you can get here, the better. This is the premium you'll be collecting. Now, I personally put about $500 in. Of course, this one will make it a little bit wonky because it's 5 wide strikes, so I can't get as close. But $450 here. If gold goes up, if gold goes flat, or even if it falls as much as what, $30, $40. So I'll just tell you it's about 10%. It could fall a little less than 10% over the next month and it still pays you that $500.
I'm typing it.
So I got filled right away at 90 cents. So you can probably try to bump it a little bit higher here, guys, because I got filled instantly.
All right, 420 and 415, right? Selling the 420, buying the 415.
Yep. So again, just to show you on a chart, we're giving it all this time. What expiration? 13th. So here's our expiration. Here's our strikes. As long as gold is above my crosshairs by that expiration, we collect our full premium. So again, it could fall. It could go up. It could go flat. We're just using that 50-day moving average as support. And again, if you've been taking this weekly gold trade, you should have, let me see if I can sort this. There you go. Today's should be expiring all the way out of the money, which is good for us. Next week's looks really good. The next week looks really good. Here's the last 2 weeks was where we got a little bit of a scare last week. but it's still now about 5% out of the money, which is really good for us.
We actually wanted above 420, not your exact crosshairs, right?
What was that?
We wanted above 420, not exactly where you had your crosshairs, right?
Yeah, 420, above
Okay.
420. Technically above 419 and 10 cents would
Okay.
be break even. But ideally above 420, we don't have to do anything. It expires from our account and we collect the full premium. And we do this
Nice,
each and every
nice.
Friday. And we kind of stack up that waterfall effect where once you're a month in of doing this each week, you start seeing your paydays.
All right. Everyone good to go on that? Looks like people
Let's
are
do it.
getting filled. Good, good, good. Cool. So, oh, by the way, I think someone asked a question over on options, not getting to take advantage of the bigger up move. Guys, that's why if there is a big up move, I send an extra alert in the morning, letting you know to actually cancel your take profit and get more at the market open. So there's an extra alert that went out this morning, particularly for that reason. So if you're in overnight options and you're wondering, if the market's moving a lot in the morning, make sure you always check your alerts, something between like 9 a.m. and 9:30, because I can't really give you too much notice. I have to see where it's at before the market's open. You'll get an alert that says, hey, we're getting a big move up. You can cancel your current target and then look to close it when the market opens for a higher profit. That's what gives us some juicier. Maybe we'll normally get 20%, but then we'll get 28 or 32 or 33% in that situation. So if you guys did that, let me know in the chat, everyone who got that. You should see it in your overnight option alert. Let me know if you got that and what you got at the end. It also does go in Telegram, Jade. So this morning you would have got a Telegram as well. Now the Telegram doesn't, of course, give you the whole alert because it's members. So at 9:16 a.m. you got the, hey, we have an update for you in Telegram. Let me know what you exited at, by the way. We'll see what the average exit there was. If you waited more than about 4 minutes, you probably got 94, 95, 96. If you got it right away, probably more like 89, 90. So it just depends on if you gave it a little extra time.
A few people saw it and made some extra money, and a few people said now they know to look for it. So
95's in there. Nice. Okay, good. All right. So guys, we're gonna get into our deep dive on Tesla, which I'm excited about, calling it the Friday focus. Before we do that, like I said, I just want to take a moment and talk about when we get some of these chaotic markets and we take some losses, especially if you're early on into something, which is always, like a big challenge. If you just get excited about a new trading strategy, kind of like me in the calendars with Mag 7, and then you start off with losers, that's probably more difficult. It's also difficult, though, even if you have a nice streak and you go and you take some losers. So let me ask the question here in the chat. How many of you guys, and I asked this in Telegram, how many of you guys have taken some hits like me in the last 2 weeks and feel like, oh, geez, this is rough. I don't know how to continue, or if I should continue, or if the strategy's broken, or if I'm broken, and you're having kind of all those doubts that go along with the trading journey. Now, I will say what I always tell folks: if you trade like me and you're mostly bullish, so like your 80% of your strategies are bullish, well, then you pretty much know when your hits are going to come, right? When there's big down days, back-to-back down 1% days, those are going to be your hits. For me, that's the case. This week, I happen to do quite well, which is abnormal for me. So I'm not saying like, hey, guys, look at me. The market was down and I made money. You should have made money too. I fully will tell you that usually when the market takes hits, I do as well because I'm mostly bullish. I just got a little bit lucky because I had some outsized positions on like some silver puts and the BITO put and some things like that that saved me this particular week. But in general, I'm definitely a subject of the market. And so what I always tell my members is if you want to trade like I do, which is 80% aggressively bullish, 20% in between, then what you have to expect and know going in is that you want to outperform when the market is good, but you're going to take hits when the market is bad. It's just, you have to accept that. If you want to trade in a way where when the market's down, you don't take any hits, then you can't really trade the way I do. You have to always have some hedges in place. You have to really kind of be neutral in most scenarios. You can't actively trade options that are going to expire the next day, all that kind of stuff. So that's the first part. The second part is something that I told Dave, which is just the emotional, psychological part of the equation, which is really about duration and kind of understanding the context. So listen to this. I got this. I stole this from someone else who wrote about it recently, but it really puts in perspective. So Peter Lynch is widely considered one of the greatest money managers to ever live. Most people consider him the number one. From 1977 until he retired in 1990. So, that's the 13 years of domination with the Magellan Fund. It averaged 29% a year in annual gains. Okay. So that's like top of the top of the top of hedge fund managers. 10 grand at the beginning would have turned into 274 grand compounding. So you would have 27x your money during his fund. Best performing mutual fund in the world. And the crazy part about the Magellan Fund is it wasn't exclusive. You didn't have to have $10 million to get in. You could just invest in the fund like an ETF and you would have made 27 times your money. Okay. So best fund out there for regular folks. All right. Here's the other side of it. Graham, ready for this?
Hit me.
Despite the historic track record of the Magellan Fund, the average Magellan Fund retail investor lost money in his fund. So he generated 29% a year, was the best mutual fund maybe basically to ever exist. But the average person still bought at some point, experienced a drawdown at some point, and then exited as a loser within that fund during some chunk of time. So
That's crazy.
That's how much the psychology of trading matters, especially on the retail side. And it's because at that time, there were big swings in the market more regularly during that. The market would swing up. People would realize they were missing out. They'd jump in. Inevitably, you'd have kind of a reversion to the mean. They'd jump back out. And so that is the challenge on the mental side. So that even if you have the best fund, in hindsight, you have the best fund, people still end up losing money. So guys, same thing I'm experienced with Option X right now. Year to date, I'm going to be down after today, after Amazon closes, which is crazy because it just went on like a 23 out of 25 stretch before that. Was my most profitable strategy. But if I look at my account year to date, I'm going to say, oh my gosh, I'm red. But I have to obviously take into context that of course there's going to be some red segments. It's a matter of blending them together and trusting the strategy for the net effect going forward. So I just want to leave you with that. Obviously, easier said than done. I get all that. But that's why the mental game is just as important, probably more important than anything else. Nothing we teach you is going to matter much if you don't have the mental game, set up. So with that said, let's talk about our Friday focus here. Good old Tesla. That won the vote. If you guys didn't see, I put a little vote in there in the Telegram. Sorry, I can't talk. At the Telegram with the emojis. I put that in there. And if you guys saw that, you might have voted. Tesla won the vote. And so then I think the question is, all right, with Tesla, are we going to get a bounce or bust at this key level? Now, so far, we're getting a nice bounce today. I took this before the market opened. So far, we are getting a nice bounce, but obviously that's just one day. I think the question is, are we actually going to make another correction toward 300? Or are we going to make a move up toward 500? Pretty massive range in Tesla. And of course, that's one of the fun things to trade about Tesla is that the range really is massive. Now, Tesla is going to be a very interesting stock to analyze today because it's kind of a historic one where the fundamentals are probably not going to look good. Typically, everyone's hating on the Tesla fundamentals and all of that. And yet historically, obviously, it's a pretty phenomenal stock. So, by the way, guys, give me your feedback. This is obviously not my traditional approach to really dive into the data and give you the typical analysis. So let me know in the chat as we go along. Is this helpful? Do you like the data points? Is it boring? Do you think it's actionable? Would love your feedback here. And then my idea here is at the end of the session, so let's say in 20 minutes to 30 minutes from now, after we dip through, we'll have everyone grade Tesla after our Friday focus. You guys can give it a grade, A through F, what you think Tesla is, and we'll just see what the consensus is within our group here on Tesla. All right, so with that said, let's go ahead and jump in to Tesla, starting with our executive summary of Tesla. All right, ready, guys? Let's jump in. Discretionary or cyclical is where people would typically put Tesla. Market cap, $1.5 trillion. EPS, 107 right now. Dividend, there is none for Tesla. Overall health score, we get Tesla rated as a 3.5. Not very good, of course, like I said. That's pretty typical for Tesla, because of the fundamental weakness relative to other ones, especially the Mag 7. You see growth is very low on Tesla, no surprise there. Valuation, we know Tesla has a huge PE, no surprise there. Strength, a little bit healthier. Here's the profitability on Tesla. You can see it there. Operating margin, low. Profit margin, low. Return on equity, low. Revenue growth, low. Earnings growth, low. Earnings beat, relatively low. So we're seeing some pretty ugly numbers on Tesla. But as soon as we get into like the upside of Tesla, things do change a little bit here with the current price and target actually ahead, showing some positive. Forward PE actually looking healthier than current PE. So we have some decent numbers here. Let's take a look at the market summary. This is basically just saying, where is Tesla finding itself right now? Well, as we know, priced at 407, up today. RSI is neutral. ATR, about 4%, so a big fat ATR on Tesla as per usual. Realized volatility, about 38%. That means the net is actually moving that much, so it's a big mover, as we know. And then on the trend status, we're pretty mixed right now because of the recent dump here on Tesla. Let's jump a little bit deeper into the forensics. So we're giving Tesla a 67% quality score. Not amazing. But as you can see, the net income versus cash flow here as we go through. Now, this is just going back to 2024 Q3. So we're not going super far back. But remember, in 2024, Tesla not only had a big run, but actually was getting pretty healthy here while the big run in EVs were still hot in 2023 and 2024. Now, what you'll notice is there's a big dip here. It starts in Q4 of 2024 and gets into 2025. Anyone know anything that was going on with Elon Musk and Tesla in Q4 of 2024 going into 2025? Dave, can you think of anything that would affect?
He was not in the news at all. And I don't think it had anything to do with the president or, trying to pull funds from every government agency or anything like that.
Okay. I didn't think so either. I just noticed that and was curious if that had anything to do, but I couldn't think of anything. But there you go. If you look at what we call the accounting quality checks, you'll see Tesla does pass most of them. Their cash flow versus net income has actually been pretty positive, even though it slumped. The margins, or I shouldn't say the margins, but the ratio has actually been pretty good. This is one that's interesting. The receivables growth versus revenue is showing that we're actually not getting that money into Tesla. I think this is a lot of government money. I'm not 100% sure on that, but I think that's why we're seeing that as a red flag there on the accounting forensics. Diving a little bit deeper into that, here we're looking at basically where is Tesla's solvency as a company. Now, interestingly, this is really has been the big red flag for a lot of the stocks lately. Like we saw Google, really amazing. I mean, just absolutely destroyed earnings. But then people said, oh, that debt, that CapEx debt, it's looking a little dangerous. We're not sure if they can live up to that. And so the debt is an issue. And Tesla's actually not bad relative to its peers here. The long-term debt is huge. It's $6.5 billion. But relative to its peers, it's really not that much. And the short-term debt is actually quite healthy. We're showing cash at $16 billion with Tesla. So debt to cash, Tesla is actually doing pretty good. It kind of surprises people, I think. But compared to these peers that have gone all in on AI, the Googles of the world, the NVIDIAs of the world, it's actually pretty decent. Current liabilities are still huge when you account for everything that Tesla has. No surprise there as a manufacturing company, those liabilities are pretty massive. But the ratio and the quick ratio are both quite healthy because it does have a lot of assets. And again, its cash is really, really healthy. Glenn, you think he's worth a lot now? Just wait about 6 months or 8 months. It's going to get just unbelievable here coming soon. Okay, and then here's
you think one day he's just going to like hand somebody the keys to the spaceship and just walk out?
He probably is. He probably is. Dave, you're sure nothing happened in Q4 last year? You're positive?
You know, it was a pretty dry news cycle.
Okay, all right. I'm just saying these drops are pretty wild. But that's our EPS reported versus revenue. Here's the interesting thing: the surprise on Tesla historically actually has not been very good. I would not have guessed this. So going back into 2023, when EVs were really getting hot, they really still weren't surprising on the positive side with revenue. It wasn't until later in that year that they really caught up and had some big surprises. So we're actually over the last couple quarters seeing as much surprising as we have the last 6 quarters or so. Again, would not have really guessed that. But the downside is the EPS trend is still moving down. We're getting lower margins. We're getting a net negative year-over-year EPS progression. So they're going to need the robotics probably to flip this around. They're going to need real sales. Elon can probably only talk his way out of this for so long until they, sell 1 million Optimuses, because we really are seeing a true decline here on the money coming in and the money going out. Yes, the carbon credits thing will play a role here as well. Are they able to get more of those? Will a regime change? Will midterms affect that? Lots of questions there on the carbon credits. I did a presentation on this going back a year or so ago where I talked about how unhealthy Tesla was if you take those carbon credits away. And that's kind of what we're seeing here over the last couple of years.
By the way, for those who I may have run a little too serious of a tone on my sarcasm there, yes, we know that he was in the news in Q4, and my sarcasm tends to run a little dry. Trump was elected. He was on the news doing the Nazi salute, and he was saying he was going to do Doge, and he was going to be cutting all these programs from the government, and he was going to be focusing on government instead of his company. I think is really the big story. That he was just pulling away from Tesla itself to be more involved in government. I think regardless of what he was actually doing, that was the big thing.
Yeah, and again, Chris posted in there, it's a story stock. Exactly right. They're going to need the story of Optimus to play, but they're also going to need to back it with some real sales here. They're not going to be able. This has been the history of Tesla: story, then some monster outsized, deliveries. Story. That they're going to have to hit it again here. Fundamentally, it's probably never going to catch up and be healthy compared to the Mag 7. But it actually, here's the crazy thing: it's actually kind of healthy compared to some other car companies, depending on what numbers you like to look at. I mean, not on the PE ratio because it's value. It's, it's a tech stock on the PE, but it's a car stock on profit. So anyway, we'll get into that a little bit.
He's certainly healthier than a lot of AI companies too.
Yeah,
that are
true.
nothing but talk. That have
True.
like no real product yet.
Great point, Dave. It's a great point. Okay. So let's jump in a little bit more detailed into the financials. So quarter over quarter revenue, we already talked about that. That's going down. Net income has not been great. The net margin from the last few, that's a pretty ugly number there at 3%. But to Dave's point, it's a positive number. 3% might look ugly, but it's a positive number. And when you get into the AI story game, positive numbers do count for something. Here you can see, again, this is the revenue to net income. And this is where things get pretty ugly. You guys see how low this income bar starts to look here as we get in. So this is where things get a little dicey. And it's actually even worse when you look at the gross margin. See the green? The gross margin here is actually staying healthy, starting to pick back up, while our net is going down. They're going to have to clean up that gap. And they can't even blame this on massive R&D because they haven't done NVIDIA level R&D either. So they can't even really, now, again, I'm not saying they haven't done, or Optimus, I'm sure, makes up a big chunk of this gap. I'm not saying that. I'm saying they can't say, look, here's the 500 billion that we did an OpenAI deal with. They can't point to that right now. So again, they're going to have to see if they can close that gap to some extent. Last quarter numbers, we'll go through those here in a little more detail in a minute, but I'm sure you guys have seen the numbers on Tesla. If you want to look at the balance sheet, it's going to be a lot of the same here. We're seeing that assets versus liabilities pretty healthy actually for Tesla compared to some of its friends. That's not really going to be the story. Cash flow, same thing, not really going to be the story here. Here's the cash flow breakdown. Interesting that Tesla does go in big spurts, I guess because of one of the credits expire when people's incentive to buy the vehicles expire in windows. And so you get that outsized demand on the cash flow side. I don't think this is the story either. We can look at it. If you guys want to go back, we can look at it a little bit deeper, but I don't think that's the story. This is probably the better story. This is the valuation. I call this valuation expectations. So right now, Tesla has a monster PE ratio. It's 371. The forward looking is a little bit healthier, 192. Now, what I think is fascinating is that if Tesla can show any legitimacy to Optimus, they're probably going to be a 500 PE ratio. And so when you look at the forward looking at 192 based on their current numbers, and then you slap on that potential on top, the fundamentals might not get healthier and Tesla might double in share price before they catch up. So this is, I think, an interesting story. We have the analyst target here at 418. That's just a blended consensus. You can see in reality, it's pretty neutral. The holds, the buys, the sells, the strong sells, the strong buys, pretty neutral, just slightly net positive. Tesla's probably close to 418 right now. I don't know if anyone has it up on their chart right now, but it's probably 412 right now. So we're within a couple of bucks of that consensus target.
Yeah, a little under 410.
Okay, 410. So we're pretty close to that. Again, here's the PE. It's a big number, but it could get bigger. Here's the forward PE. The PEG is 6.4. I think Tesla is probably the least impactful stock to look at fundamentals of pretty much any stock we could consider. But just know, unless something really goes ugly, I don't think that the true trading PE is going to go down much. So if they hit this forward PE and then it goes back to a 370 net PE, well, guess what? That means the stock's going to be up 50, 80% just doing that. Again, EPS growth, right? We've talked about it. I won't hit it again. It's an ugly picture. They're going to have to spin the story and then also show some numbers to get there. Here's your market cap against your PE, your price to book, your price to sales, all that good stuff. Notice, of course, that Tesla remains very, very high beta, which just means it's a mover. It's a mover and a shaker. Here's our chart. You can see we're in what we're calling the transitional trend regime. That means it already made its cross below. It's on top now. It's either going to transition below all of them or it's going to transition above all of them. So right now we're still mixed, but we're going to have to make a decision here at some point whether Tesla is going to go into bearish territory or it's going to snap back up into bullish territory. Here's our RSI. You can see overbought typically does respond. Overbought typically does respond. Oversold typically responds as well. But the mushy middle can last quite a while on Tesla. So we're still pretty much in that mushy middle with Tesla as we speak right now. Here's our volume on up days versus down days. Average volume there is monster. It's like $25 billion average volume. What we're looking at right now is just when volume gets involved with Tesla, it's still very much a coin flip stock. People sell Tesla as aggressively as they buy Tesla. So you don't see all the high volume days as green, all the low volume days as red. In fact, Tesla is one of the few stocks you'll see that has runs like this, 8, 9 days in a row with increasing volume moving to the downside. It's a very speculative stock in nature. Okay, and here's the volume ratio. Basically, just what is the abnormal threshold? How often do we break above it? Well, with Tesla, all the time. Okay, because it's a very speculative stock. All right, this is a fun one. This is our options and positioning dashboard. Going to take a second here because we're loading up a whole bunch of options data for this particular scan.
While we're waiting for that, never mind.
Oh, see, got you that quick. So this is basically looking at we call it the pressure map. It's just basically looking at where is all the pressure aligned. This would be not as nuanced of a version as Keynes Gex, but like a very basic summary of that. Looking at 420 has a lot of pressure in here. 430 still has a lot of pressure, but we do have some pressure down here at 410 and some negative pressure at 405. But it's within this scope, these couple deviations here. Net Gex, we're showing highest at 420, but take that with a grain of salt. This is cumulative. It's not as detailed and nuanced as something like Kane would give you there. So just, again, keep that in mind. Key levels, 430. That's going to be the big one on the bullish side. Gamma flip is an interesting level. That's when the exposure flips negative and we have to worry about a drop lower, 408. So keep an eye on that. Put wall, that's basically where all that pressure ends. So you should have some support there. Call wall, 430. Again, that's where you should have some natural resistance to the call side. Here's an interesting one. The IV skew on Tesla is showing right now as a negative dip on the put side here. So that we'll see if that holds up. But when we get a big skew to the downside, normally that means Tesla's going to rally from there after that finishes up because it's going to kind of suck out those put buyers. Also notice here, we have a big IV increase over the next 3 to 6 days. That's weird, but I think it's going to be the new normal with these short-dated expirations. So this is kind of what I was saying before, that I think we'll get some of these shorter-term IV increases before it flattens and descends back down, because IV is going to go down typically as you get further into dates. But as we go over weekends and have these extra expirations, you're not going to want to sell income at the 3-day level. You're going to want to sell income at the 6-day, 8-day level where you're getting more premium. Okay. Someone asked about those calendars. I still have them open. The reason I have them open, though, more so is just as an experiment. I kind of want to see how they react later into the day. So you can sell them. I think my Google one was down 15% or so. So you can hold or sell. I'm going to hold it a bit longer. I just want to kind of trace the reactions throughout the day. All right. Expected move right now, about 14 bucks over the next 3 days. So if you're trading, for example, Monday's expiration, this is probably about the cushion that you want here on Tesla. Then I put together just an analyst rating, kind of a summary of all the analysts. If you summarize with where Tesla is, and you account for everyone all the way up to like the $600 strong buy recommendations, you get a target price of 458. Now keep in mind, our consensus price is more like 418, closer to current price. But the upside here, if you take into account all those target levels, ends up being at about 458. So, that's pretty good upside. We'll see if Tesla can hit that. I think I looked, and the average time it took to hit that price was 6 weeks, 8 weeks, something like that. So, if you hit 458 in the next 6 to 8 weeks, pretty good trade on Tesla. Here's just your mapping of those ratings. Again, strong buy versus buy, hold, sell. Only 8 sells versus 21 on the buy side, with a fair amount in the middle. So definitely bullish on the consensus, just not dramatic. We'd still end up kind of hold here when you net it out. Here's the revision momentum. You can see, look at the back and forth on Tesla on the analyst revisions. We've got upgrades, we've got downgrades, we've got upgrades, downgrades, downgrades. Tesla is just a, again, speculative stock, bounces around. We see that a lot. Trend by period. Okay, this is just basically how has that target that they've made for Tesla changing over time. Relatively flat when you blend it together, but still bullish. Here's if you want to just look at the individual firms: Morgan Stanley, Goldman, Deutsche, all those are in there. Here's the heat map of how they've changed over time. So you can see Morgan super bullish, went neutral. Piper loves Tesla. Some of these other ones were neutral that have gone more bullish. Baird, bullish, neutral, bullish. JP hates Tesla. They're negative the whole way around. So you can just kind of see how that has fluctuated. And then if you want to look at the recent upgrades and downgrades, not a ton recently. Most one was that, Morgan flipped to the downside. Those are all there. Then we have our competitive context. Now, I don't really think this is fair because we're picking car companies here to rate Tesla against. It's more of a tech stock in terms of how it's going to be evaluated. But this is what I was saying. When you look at it as a car company and you ignore the PE, well, looks pretty good because it actually, the revenue growth is better than, like General Motors, for example, or Toyota. Operating margins, not horrible. I mean, consider the fact that Rivian and NIO, who have revenue growth, but are all on debt, their operating margin is negative 63% and negative 14%, respectively. And then the forward PE, obviously, is where Tesla's just going to be crazy. Although look at our friend NIO with the Ford PE. So we rank Ford here as the strongest competitive positioning because it has a good mix of margins. The PE is obviously much more reasonable, but Tesla, in terms of just showing up with real revenue and especially on growth relative to GM, to Toyota, it is a little bit healthier. So there is our Friday focus on our friend Tesla. So based on everything we just looked at, now comes time to score Tesla. Let's get 520 grades in there, and then Dave will count them all individually. What do you guys rank Tesla on an A to an F scorecard here? Is it a stock that you think is a great buy? Is it a stock that you think is a C? It's kind of just net neutral. We'll see what happens. Is it a stock that you wouldn't touch with a 10-foot pole? And it's an F for you. Give me your grades. we'll see where everyone falls in. I'll tell you what my school. Des says H hate. Um,
I say it's a C.
we got a lot of neutrals. We got a lot
Yeah,
of
I say it's a
neutrals.
C. You know what? For me, the big thing is where the chart that showed the volume, right? Because the bullish and the bearish volume is so intermingled, and you don't have those runs. And that's why, to me, that's why you see that choppiness where it's constantly staying in the middle. Because if you have, even if you had the same number of red bars as you had green bars, if they were grouped, then you'd have runs up, you'd have runs down, and you'd be able to, more easily kind of predict. And obviously you don't exactly know when it's going to turn around, but here we don't even have real direction. So I think there are definitely trade when it's in the chop, right? So if you apply a chop strategy, a sideways or, a neutral strategy, then you can really play it. If you're trying to go directional, then I think it's an F.
Yeah, yeah. Well, I think we average right around uh the C level. I think for me, just now that we got all of our scores in, or at least a couple hundred scores in, not everyone participated. Come on, guys. But I think for me, it's much like I said at one of our roundtables recently. I think as a high quality stock, might even be a D. But from a trading standpoint, it's probably a B because the outsized risk reward. Because you could put a debit spread for that, $500 level on Tesla, which is, I think a coin flip that it could get there. You can make 1,000% ROI on that coin flip.
Yeah.
Now, what you could even do, might be better, is do a two-way trade because it probably is going to boom or bust around this $400 level. So we could actually look at it and see if we can get enough value there. Let's see what it looks like on Tesla.
By the way, I
Not
will
Resla,
actually
Tesla.
count up all of those A, B, C, D, E, Fs and let you know what the numbers were in
All
closing
right.
playbook.
Remind me. We'll announce it on closing playbook. I like it. So what I'm thinking here is if we could get enough value, and you can see it here on the chart. These are the ugly charts that I wish I didn't use. That's why I'm always on TradingView, but just for easy sake, a bounce here probably means at least something into the 470 range. I honestly think could be 500 plus. A breakdown here probably means into this next shelf down here, 360, 355. And you can see these runs take 6, 8, sometimes even 10 weeks. Sometimes they're faster, like this one. So we could see if we get enough value on there. I'm doubtful that we will because Tesla is already pricing in those big moves. I mean, you can see by the time we go out 7 weeks here, 6 weeks, let's say, because it's the monthlies, it's already pricing in a $54 move in Tesla. Like the market makers know the Tesla moves. We're not catching the market by surprise saying, hey, I bet they don't realize Tesla's going to move a lot. No, they know. But we'll see if we can get any value here on something. So we probably have to go to the 360, 365. Pretty good, actually. Oh, now I'm tempted, Dave. I was planning on just showing for example's sake and not trading it, but now I'm tempted.
Right.
Let's see. Dang, you can get over 100% on that coin flip. I mean, it's a big move. We're talking about a $60 move in the stock. So, we should make over 100%, but it's pretty good. Dang, I'm tempted now. All right, let's see.
What was it, $1.78?
Yeah, let's see what it would be. So let me just draw it with this. 470.
465, 360, 355.
355 would be the bottom of the box. So yeah, I mean, it's a big box. It's taking this entire range that we've been in since September essentially into it, except for one pop here. Obviously, the idea being we're going to break out of that at this level, but that's a big range. Let's see if we can go a little tighter. That's pretty juicy. Let's see if we can make 460, actually maybe even 455. That would be well inside the market maker move, so that would be more attractive. And then something like 370 on the downside. Oh, that's it. All right, that's our coin flip. 455 and 370 gives us our coin flip. It's going to look a little better as a box. There you go. Looks a little better as a box. That way all these bounces get outside the box. And we haven't really had the breakdown, but you can see, breakdowns are normally pretty fast and heavy on the downside. This is going to be a level here around this 360 area, but you should have some net profits in that. If I was Chris, you know what I'd do if I was Chris, Dave?
You do two of them?
I'd do the spider trade.
Yeah.
I'd do the regular condor for this level, and I'd do the reverse condor for this level, and we get funky with it.
What was your debit on the two-way?
This is basically the coin flip, 240 to 250.
Yeah.
So I'll try this at 240. Definitely not more than 250. We have to keep the 100% in there. So guys, if you're taking this user limit, we're definitely not paying more than 250 for it. I'll start at 240. We'll crawl up. Nice thing is Tesla's a great stock to trade two-way trades on because there's so much volume in there. So when you're trading four legs, you want volume. You want to be able to get filled for exits, that sort of thing. So we'll keep an eye on this. So this is our level. Our break even then is going to be a little bit below that on each side because we have 250 to work with on either side. But that would be our box. And if you wanted to get crazy, you could pull a Chris and build a typical iron condor around it, which guarantees you a win of one side and gives you the potential that, right in between, you could make some. You could double, triple up on it. So if you guys want to get real funky, no, earnings shouldn't be in the box. Earnings are not until, wait, maybe they are. April 28. April 28. No, we're good. Yeah, we're good. April 28. Okay.
Joanne, yes. Even when you do a credit trade, your available spending power goes down because you have to cover the risk of the trade, regardless whether it's a debit or a credit.
Oops.
The difference is you get cash, so your cash goes up, but your overall spending power still goes down the amount of the risk.
Yeah, and if you haven't seen my thing, difference between credit and a debit spread, that it'll probably help you. The key is there really is no difference in most scenarios. So like the whole idea that, I'm getting a credit up front doesn't really change the fact that you still have the same risk reward, you still have the same buying power going out, all that good stuff. All right. Well, I guess to wrap up our session, we should talk about weekend options because that's coming up here in just a couple hours. Weekend options was our most profitable strategy in 2025. So we'll see if we can pull it off again in 2026. The top is calls and the bottom is puts. Kate. So top two are calls, bottom two are puts. You're doing a call debit spread on the top and a put debit spread on the bottom. By the way, speaking of that, I have for those of you guys who are in my HQ, two announcements. Some of you probably already saw it. Two announcements. Number one, you have the market map access now. Just click the link. I posted in the HQ. I can post it again for you. That gets you into the Telegram with my dashboard. Number two, I'm releasing a new HQ only tool here, hopefully mid to late next week, if not the week after, which is the options profit projector tool, where you can pick any option, any spread, and it'll walk you through the scenarios of how it'll make money, how much it'll make in all those different scenarios so you can better plan out your trade. So just keep an eye out for those two. As we transition here to talk about weekend options, because we have that next opportunity coming out today, what do you guys think of the Friday focus? Do we like the idea of a deep dive into one individual stock where you guys can vote on which stock? And then we can take a dive and kind of grade it together and then see if we have a consensus, maybe a trade opportunity from that stock.